Let's bring in Jeff deGraaf, research chairman with Renaissance Macro. He's an institutional investor, Hall of Fame technical analyst. That's a lot to live up to in this particular segment here. Jeff, let's start with chart one. What are the speculators telling you?
Well, I think the speculative positioning is really interesting. Thanks for having me, first and foremost. But you can see big net short positions from large speculators in the futures market. And those coincide with other areas of market lows. And, by itself, it doesn't mean that we're at a market low. But I think what's important in this environment in particular is the consensus, what the consensus thinks about the Fed, and then how they're positioned. Because if enough people are positioned in anticipation of enough bad things happening, then it's going to be very hard to find that dry powder to actually push things into a worse condition for equities, regardless of the data, right? So, from our position, we like the positioning because we're seeing a lot of bears express themselves with short positions, and we think that leaves a vulnerability to the upside.
Is the blue line on that chart indicating that those speculators think the S&P could get cut in half?
No, it's not. Don't worry about the scaling, Tyler. It's just for visual reference, but it does align itself appropriately with where we were back at the COVID lows. So really the same type of sentiment or the same type of positioning back there. And then even if you go back further, similar to where we were back in 2018, both of which were areas that I think at the margin, as you look back, you'd rather be a buyer or would have rather had been a buyer than a seller.
Well, I won't worry about the scaling then.
Yeah,
Thank goodness.
but it does show up nicely, the blue against the
Yes,
orange.
it does.
Yeah.
Beautiful.
Jeff, your second chart here also shows that we're likely to see a retest.
Yeah, so we had a good momentum signal, and it was one of about 30 momentum signals that we've had since 1960, and that took place about 2 weeks ago. And those are high probability signals. I mean, those for us get us really interested in the long side and being more bullish and more aggressive. I like to fly airplanes. We always have an out. You have to think about the alternatives. And so one of the things that we use is a 20-day low in our work to suggest that the momentum signal might need some more time to marinate and to really come into its own. That happened in 1962. It happened in 1974. And so that undercut low, even though Powell sort of pushed that on Friday, suggests to us that we're probably in a retest sequence. I think importantly, when we go back and look at those thrust indications, those momentum indicators, even after we've made a 20-day low with that having happened, you don't go on to make another undercut low. So the combination of sentiment and this momentum signal, even though I'm disappointed that we made a 20-day low, still suggests to us that it's more likely a retest than it is a continuation of the bear market.